after 42nd episode of the Union Budget Analysis. So, thank you, ladies and gentlemen, for joining this evening for the analysis, which is always an awaited thing. This time we are also projecting on the YouTube channel, so we understand a lot of people are joining YouTube also. Of course, we lot of people that we have heard, there are a lot of different analysis, but today we have the experts that we are very keen to know from the tax point of view, Mukesh Bhai, and the economic analysis from Dr. Ravindra Dolakia. I am given a pleasant job to introduce them. Mukesh Bhai and Ravindra Bhai do not need any introduction, but I need to do the protocol.
And maybe I'll need to do that as a protocol, maybe for just 1 minute, sir, if you permit. So yes, Dr. Ravindra Dolakia, experienced teacher, researcher, trainer, and his at IIM Ahmedabad, MS University, and several other places. His research interests are macroeconomics, growth, and development. So we know that his analysis that will help us in dissecting the intricacies of the budget. Of course, he has been part of the high-powered policy-making committees and member of Monetary Policy Committee of India, Sixth Central Pay Commission, and many other expert committees. And he also, of course, an independent director on many boards, including the Central Board of Reserve Bank of India. Mukesh Bhai, of course, we know part and parcel of Ahmedabad Managed, the foundation, I would rather say. And he is the man who is taking this marathon to ultra marathon for all the years that all of us are listening to him. Since I was actually a school child, I can relate myself, Mukesh Bhai, with these guys that I was attending as a school when I was hearing you also, as many years that I have been hearing you, and keen to hear you. Mukesh Bhai, I cannot introduce him from the because but I need to do this two-liner. That, of course, apart from his expertise as an international tax expert and advocate and 45 years experience, he is a prolific writer and speaker, 4,500 weekly columns in English and Gujarati, 50 editions of his book titles, and more than 500 TV shows. And certainly every single show has an insight in it. So thank you, Mukesh Bhai and Dr. Ravindra Bhai Dolakia. We look forward, of course, budget. Most of them will say balanced budget. Some of them, of course, will say imbalanced budget. Someone will say inflation. And of course, Mukesh Bhai, we are very keen to see your analysis on the math of the tax rates that everybody is very keen to understand, that what is this default new tax regime and how does it make sense to a layman in understanding how he's going to file the income tax return. So thank you very much for having this one more session on the analysis. And I would invite Ravindra Bhai first to please. But before that, I do the honors in welcoming both the speakers with a floral welcome and a memento. Sir, over to you. Would you prefer from there or here? Yeah.
Good evening, everybody. And it's a pleasure to, interact on this forum. Although this is for the first time that I'll be talking about budget in this forum. It used to be my elder brother and my teacher, Professor.
Second time. Ekbar Bakul bhai ત્યાં હતા ત્યારે પણ you had taken his place.
I don't remember. Anyway. Okay. Now, it is always difficult to step into my brother's footsteps. I have been experienced to do that very often at IIM also and here also. But it's a pleasure because this is a kind of a budget where there are lots of hope, there are lots of aspirations, and there are lots of problems also, in a way. So this was not a straightforward kind of a walk for any finance minister, or I would not say only finance minister, because she is the one who presents the budget, but the whole team is behind her who prepare the budget. So whenever I say something about finance minister, or I say something about the Ministry of Finance, please note I'm really referring to the budget makers, the guys who are making the budget. And that is something which at the outset, I'm saying that it is not a personal kind of a reference. It is more of the reference to the budget making team. Okay. Now, whenever we talk about the next slide, whenever we talk about the macroeconomic analysis of the budget, it would entail the following things. And that is how I have actually, outlined my entire talk. I organized my talk in this way. The first and foremost part which we should really address is the plausibility of assumptions about inflation, growth, and exchange rates, which are always implicit in the preparation of any budget, whether it is at the household level, or whether it is at a national level, or whether it is at a state level. These three things have to be assumed. These three things have to be considered. The values, quantitative values, are important. Otherwise, qualitative things will not work. So what are the assumptions, and whether the assumptions made are plausible? Plausible in the sense that whether they are feasible, they are practical, and they are pragmatic. That is the kind of the things that we will be talking. The second one is progress on the fiscal consolidation path. Now, fiscal consolidation path is a word which is being used very often, because of the simple reason that we have the problems which were created willy-nilly for whatever reasons in the past, which has driven us to a situation where the debt levels are very high. I'm talking about the public debt to GDP ratio. Okay, this is the general way in which we measure the debt and say whether the debt is sustainable or not. And if the debt is not sustainable, the problem is that whatever debt we create, we have to pay interest on that. And if the interest payments keep rising and rising and rising, ultimately a day will come when we have to borrow in order to pay interest. And that makes the life extremely miserable. It is called a vicious circle of debt. So that trap, I think that is the reason why whenever there is a reform agenda on the fiscal front, the reform agenda implies fiscal consolidation. And that is the path that I'm talking about. There are several well laid down criteria for the fiscal reforms and fiscal consolidation path. The next thing is about credibility of fiscal math. This is something which fiscal math, of course, without fiscal math, you can't prepare the budget. So the budgeting exercise necessarily gets into the details about exact preparation of the numbers. And it is that fiscal math which has to be very carefully diagnosed. And really, you have to really come to that point where we say whether the fiscal math is having the credibility or not. Are there anything which are not credible? Because in that context, it entirely entails the final impact of the budget on the macroeconomy. The final thing is estimate of personal income taxation, tax evasion, and the budget. Because this I have kept it at the end, because this is something on which I have worked, fortunately or unfortunately, I can say that before 31st December 2022, when my paper got published in EPW, I can safely say that the dimension of the problems were not known in the country. So I am for the first time trying to put my neck out and calculate and say that these are the kind of the tax evasion that is going on. If the tax evasion is going on, then the budget in the light of this makes what kind of sense? And of course, I'm keeping this at the end because it will be a good type of a bridge for Mukesh Bhai to take over. I think that is the sense in which I am doing. Now, next, we start with the plausibility of assumptions. The inflation. What is the assumption in this budget? The assumption in this budget is essentially that the nominal growth of GDP is assumed to be 10.5%. It's important to realize that in the last budget, the assumption was 11.1%. It was made at a time when it was thoroughly implausible. It was thoroughly impossible because they had assumed that the GDP will grow around 7% and the inflation rate will be around 3.6 to 3.7%. When you combine the two and take into account the cross effect, it becomes 11.1%. If I remember it correctly, and you guys should also remember it correctly, because Bakul Bhai, my elder brother, had from this forum itself had categorically said on the 2nd February 2022 that this assumption is not making sense and that we are going to clock something like 16 to 17% nominal growth. And therefore, most of the calculations and most of the numbers will necessarily get revised. This was there. It so turns out that he was absolutely right. In fact, in the revised estimates, you find that the growth which was assumed was completely off the target. In fact, the actual growth turns out to be something in the range of 15.5%, and 15.5% because the GDP of an earlier year was revised upwards. If you take the same GDP and if you take the growth, it is exactly 17%. So this is something which is very significant. Now, in this context, if we are saying that we are talking about a 10.5% rate of growth, it is essentially bringing down the growth from something like 16 to 17% to 10.5%. That means that there is a slowdown. And this slowdown is not confined only to rectifying the inflation, because the 17% came because 7% was the growth of the GDP and about 8.5% was the growth on part of the inflation, because the last year was a very high inflation year. Both WPI, that is wholesale price index, and the retail price index both increased significantly. Now the correction is taking place because international prices are softening and coming down. As a result, you find that both the consumer price index inflation also has come down and is below 6% now, and the WPI inflation has also started coming down. And in fact, for the first time, Economic Survey recognizes that after a long period of time, the inflation by WPI and inflation by CPI are now merging practically at the same number. However, what the Economic Survey has assumed is, and these are the assumptions of the calculation for the budget, that the WPI is going to fall sharply. That means it is already at 5.7, 5.8% by now, but that number is going to go down very sharply. Consumer price index may not go down that sharply. In fact, RBI has forecasted that it is likely to be around 5.4, 5.3% or something. And over the whole year, it is likely to be above, hovering above 5%. It will not go down below 5%. This is something which they have said. And I think as far as the CPI is concerned, RBI is more reliable. Now, as far as WPI is concerned, in fact, WPI is more impacted by the international factors. Now, international factors are basically in terms of the war, number one, petroleum prices, number two, and the third thing is slowdown, global slowdown. Since the global slowdown is there, therefore the demand for the basic commodities is not picking up. And therefore, they expect the commodity prices to sharply come down. Not only that, statistically, the last year was a very high inflation in terms of WPI. In fact, the inflation rate was more than 15-20%. As a result, now the time that is coming, you are going to have the serious base effect. So the base effect will bring down the inflation rate artificially. Now, there is likely to be the case. This is what these people have assumed. But please understand, when they are talking about the inflation rate, and let me just come down to the numbers. The nominal GDP of 10.5% is broken down into the real growth of GDP of 6.25%. This is not given anywhere. Please note it. It is 6.25%, which is the real GDP growth. And about 4% is the inflation rate, not in terms of WPI, not in terms of CPI, but in terms of the GDP deflator. And GDP deflator inflation rate is generally obtained as a weighted average of the WPI inflation and the CPI inflation, the weights being 70% for the WPI and 30% for the CPI. If you incorporate this thing, it means that if you consider the entire scenario now in terms of the assumption, plausibility I'm questioning and I'm talking about, if I go by the assumption which they have made of 4% GDP deflator inflation, it implies 5% of the CPI inflation and about 3.6% of the WPI inflation. This is probably going too far. This is assuming too much. In my mind, this is not likely to happen. In fact, the plausibility wise, I question this plausibility right in the front. I am feeling that the inflation rate in terms of the CPI is on an average likely to be more than 5, something like 5.4 or 5.5 on an average for the whole year. And the WPI inflation is also likely to be around 5. That means that I expect the inflation rate not to be 4%, but to be 5%. On the other hand, when we go to the real growth is also considered at 6.25%. This year, which was really a very bad year for the economy, we have clocked 7% rate of growth in real terms. To reduce the rate of growth to something like 6.25 is 3/4 kind of the reduction in the real growth is not justified on several counts. Though these people are arguing at length that why it would be like that. If you read the economic survey in details, then it only talks about certain plausibilities and it doesn't really get into the real convincing arguments. It only says that in the medium term, we can expect 6.5% growth. And if the reforms are carried out, we can expect 7 to 8% growth. Sir, reforms are carried out. So it is not if, they are carried out. Not only that, the global situation and our response to that is also now becoming more and more independent. Since we are now talking about Make in India as a major program, and we are getting Atmanirbhar in several respects. Therefore, and on the other hand, they are recognizing, on the face of it, they are recognizing that the internal demand factors, namely consumption and investments, private investments, are picking up. To top it all, government capital expenditure, government capex, is also for the third consecutive years in a row is clocking a significantly higher rate of growth, something like 33%. Sir, considering all these things, if you feel that it is not likely to be resulting in any tangible outcomes, that means we are wasting the efforts, right? In my opinion, this is absolutely conservative assumption. 6.25. I would say, even conservatively, I would say that we can consider 6.8 to 7% as a rate of growth. 6.8%, the economic survey mentions as an upper limit. I would go by the upper limit. I don't want to question them completely. I would say 6.8%. If you take a 6.8% and 5%, sir, the nominal growth rate is likely to be in the range of 12.2%, which means we are in for another surprise like this year. We are likely to have a nominal growth of 12.2% or so, which implies that most of their calculations for the tax revenues and other things, which will come at a later stage, and we will discover that they've assumed a buoyancy of 1. Again, highly conservative assumption. Highly conservative assumption. Buoyancy of 1. That means tax growth will be exactly the same as the income growth. There will be no, rewards to the extra efforts that they make to bring the additional taxpayers into the net or get additional income into the net. Assuming that nothing of this thing happens, it's a buoyancy of 1. Now, if that happens, it only means that we are likely to have another 1.5% minimum, maybe more, of the extra tax revenues which will get generated. That means that whatever calculations and whatever numbers are there, we have to take it with the pinch of salt. That they are conservative numbers, and very often you discover when you interact with the bureaucrats, the guys who are generally in the making of the budget, involved in the making of the budget, these people prefer to be conservative. Why? Because their performance is basically dependent on whether they achieve the final number or not. Like, say, for instance, this year, 6.4% fiscal deficit target has been exactly achieved, 6.4%. So therefore, fiscal marksmanship is excellent. People pour praises. Sir, what has happened actually? In terms of the fiscal deficit, the gap in absolute terms has actually increased in proportion. So the fiscal deficit numbers in rupees trillions has actually increased by 1 trillion. And yet we are saying we have met the target. Why? Because they had underestimated the growth so significantly by 50%. Sir, this is testing the blood. You have tested the blood. So now you are getting the same repeat. The repeat is that we might actually get into this kind of the numbers next year. So this is a possibility. The final thing is about exchange rate. Please understand what is the exchange rate. I mean, by and large, people don't talk about this. They don't relate that budget with the exchange rate assumption. But exchange rate assumption is necessary and is necessarily implicit in your numbers. Customs duty, for instance. Customs duty is a consideration based on three things: growth of the quantity of imports, growth of import prices, and the exchange rate increase or decrease. If you combine these three, you get the customs duty growth. Customs duty growth is assumed to be exactly 10.5%. Buoyancy 1. What does that mean? It means that if you assume that the import intensity does not reduce or increase, then your growth of imports in physical terms will be the same as 6.25%. And your inflation on an average will apply to that also. Therefore, the inflation rate of 4% will be there. And therefore, the total growth will be 10.5%. In that case, you are assuming that exchange rate will be absolutely stable and steady. Most unlikely to happen. Because Fed, the central bank of the US government, has only yesterday increased further the rate. And it says that this is not the end of the cycle. It is going to go on. Sir, if it is going to go on, there will be an upward pressure on the rupee-dollar exchange rate. That means that we are actually expecting some kind of the depreciation. If our inflation rate is likely to be around 5%, their inflation target is around 2%. In that case, you do expect about 3% depreciation anyway. If there is a 3% depreciation, sir, it only implies that 3% depreciation, 5% the import prices increase. That means that practically you are assuming that the import quantity growth would be only 2.5%. This is again a disaster. So these assumptions don't make sense at all. However, in all due respect, ultimately it is the total budget that we have to see. But I have my serious problems about the underlying assumption right at the outset. Okay, so this is one part. This is one part of the analysis of the budget, which I'll say. What is most significant to understand is, if everything was predicted and assumed on the basis of the past and recent past trends, then the whole question is, why do we have budget? What is the implication of the budget on the growth? What is the implication of the budget on the inflation? What is the implication of the budget on the exchange rate? Sir, on the other hand, the proposals contained in the budget are significant. They are going to impact the growth very positively. They are not likely to impact the inflation very significantly. Inflation will be determined more by the external factors. And the exchange rate is again likely to be influenced by the bilateral factors. Given these things, my understanding is that in the next year, when we again meet here, maybe at that time Professor Bakul Dholakia will be here. So at that point in time, probably you would again say the same thing, that the assumptions were too conservative and actuals are coming out to be more favorable. Okay, next. Now let us talk about the fiscal reforms and consolidation. Sir, fiscal reform requires what? Fiscal reform requires less government. It's a very important thing. The private sector, in fact, the whole purpose of the reform was to make it more transparent, more open, more competitive. And in order to have that competitiveness, you need to encourage private sector. That means you need to provide fiscal space to the private sector. So the fiscal space to the private sector means the government should reduce its presence. One way of reducing the presence is to reduce the government expenditure as a proportion of GDP. If that is happening, it is called the sticking to the reform path. If that doesn't happen, it's a deviation. Committed expenditures, another very relevant thing. It requires that the committed expenditures, because this is something like first charge on your thing. Whatever are your income, the first charge are the expenditures which you have to make, you are committed to make. There is no way. You are obliged to do that. In that context, the question is that the committed expenditures as a proportion of the total income should come down. And simultaneously, because proportion of the committed expenditure can come down, so also the proportion of the discretionary expenditure can also come down, and therefore the whole proportion of expenditure can come down. Sir, that is not reform. The reform is that the discretionary expenditures, which is developmental expenditures and all that, should actually increase as a proportion. If this happens, the reforms are on path. The third thing is, the second thing is fiscal consolidation requires what? Reduce fiscal deficit as well as debt. That is, fiscal deficit as a proportion of GDP and debt as a proportion of GDP, both should decline. Because both are rather high in our country. The next thing about the fiscal consolidation is, it is not just enough to reduce the deficit, fiscal deficit and all that. You need to improve, or you need to have better quality of fiscal deficit. What is the quality of fiscal deficit? Quality of fiscal deficit is the capital expenditures which you finance out of the deficit. So that is the kind of a thing you must really increase the proportion. Higher capex is what is implied. So if that is happening, we are consolidating on the right path. Next. Now this is the budget at a glance. What I have done is, there are several items which are listed out. Then 22-23 budget estimate I have given. First in rupees trillion, the second as a proportion of the GDP at that time. Okay. Then to 22-23 revised estimates, because that is now, it's a revised estimate. Again, rupees trillion and proportion of the revised GDP, okay, which is there. And finally, 23-24 budget estimates, which is again rupees trillion and as a percentage of GDP for that year. Okay. Now you can see for yourself that compare the 22-23 revised estimates with the budget estimate for 23-24. And what you find is that the first part, total expenditures of the government, is actually falling. So that means we are sticking to the reform path. We are not deviating at all. There was a deviation which was there marginally from the budget estimate to the revised estimate. But from the revised estimate to the next year's budget estimate, we are again coming back to the reform path. The next thing is committed expenditures. Sir, this is very relevant. You can see for yourself, if you look at the numbers turn out to be 24.4 and 24.3. trillion rupees, but in terms of as the percentage of GDP, it is 6.40.
8.93 and 8.02.
Yeah, 8.93 and 8.02. Yes, 8.93 and 8.02. Significant reduction in the committed expenditures as a proportion of GDP. This is the major fiscal correction. And we would like to understand how this has happened. Because this is a major kind of fiscal correction. On the other hand, you find that the discretionary expenditures have significantly improved. That from something like, yeah, it is a significant improvement. And therefore, you can see that a large part, something like 91 basis point, was the decrease in the government, committed expenditure, and 50 basis point is the increase in the discretionary expenditure. This makes the budget very special because this is exactly adhering to the reform path. And this is very important because, sir, this requires very, very harsh decisions which have been taken but not spelt out enough in the budget speech. This is the requirement to understand that these are harsh decisions. Sir, it is not a soft budget. It's a harsh budget. It's a tough budget. And tough budget in the election year, before election year, is a matter of political credit. One would give political, bonuses on this issue. They have not been, succumbing to the popular demand. There is no populism at all. This is what it means. The next thing is turning out to be the effective capex. Effective capex has substantially increased in the budget thing. This is again a very creditable thing. Next to that thing is that we have the revenue receipts, which are again rising. So if you say the revenue receipts, which come from the tax and non-tax revenues, they are significantly rising. So that is also a part of the reform process. We are adhering to that. And then you have the red. This is exactly the point. That less government could be either in terms of the government expenditure or in terms of the privatization of the existing public sector undertakings. So the numbers in the red, which I am mentioning, are the numbers which are actually showing that there is a significant, although its contribution is on margin, but on margin, it has not been given enough weightage. That means there is a recognition of the fact that this is a budget prior to the election. That is, the next year there is an election. This year, I don't want to create political turbulence. That is the reason why I am not going very strong on privatization. Our privatization experience has also not been very good. So only 61,000 crores have been provided for this thing. This is much less. And actually, it shows a decline. This is going against the reform. Okay, that is one part. Then the next thing is about what are the things? Non-debt capital. Non-debt capital receipt is the same thing. Then fiscal deficit is again coming down, which is very relevant. It is important. And that is the sense in which this budget at a glance gives you the idea that we are following the reform path for the fiscal development. Other than that, there is also something which needs to be understood. And this is a serious problem with Indian public finance. The serious problem with the Indian public finance is that you find that the numbers that I have highlighted in the green, it shows that this is the non-defense discretionary expenditures. Now, compare all through budget of last year, revised budget figures for the last year, and the budget figure for this year. Sir, compare this to the fiscal deficit figures. I would rather like to point this out to all my professional colleagues who have been senselessly and sometimes very emotionally and passionately arguing for very fast, very rapid fiscal consolidation, that the fiscal deficit should come down. I would rather like to point this out to them. What does that imply? Sir, had we not got the fiscal deficit in the last year budget and the revised budget figures, there would not be any discretionary expenditures at all. Because all your revenues and all your non-debt creating capital receipts are together not sufficient to meet the committed expenditures. So if you don't have that kind of a thing, if your committed expenditures are more than your revenue receipts and the non-debt capital receipts, sir, what are you talking about the developmental, the programs and projects and other things? Can you build a bridge? Can you build a road? Can you build a hospital? Can you build a school? Can you have the drinking water project? Can you have any other irrigation project or anything? No. So the only way in which India can have this kind of expenditure is by borrowing and increasing the fiscal deficit. This is the tragedy of the Indian public finance. In this budget, for the first time you find that the discretionary expenditures are more than the fiscal deficit. That means only a part of discretionary expenditures are financed by borrowing, but some part of the discretionary expenditures are now met out of the regular revenue receipts. This is something which is important, that we are returning back to the normal. Otherwise, it was a tragedy. So this is something which is very significant to understand. Okay. This is what I consider that this is a very significant slide in that sense of the term. We have to see this. Now the next slide is on the debt deficit and interest rates. This is a very relevant matter, sir. For the year 2021-22, 22-23 budget, 22-23 RE and 23-24 budget estimate, the debt to GDP ratios are the ones that I have mentioned. It is systematically coming down from 57.4% to 56.2%. Unfortunate part is that between the revised estimate of 55.9% and the budget estimate for the next year, 56.2%, there is a marginal increase. This increase has happened because the denominator is deliberately depressed, as I was talking about. If you consider the denominator to be normal, this will not occur. That means you are on the path otherwise. But because you have deliberately depressed the estimate of the GDP growth, this is what is happening, that your debt is actually marginally rising. In spite of your completely narrowing down and bringing the fiscal deficit into control. In spite of that, this is happening. So on the whole, I would say fiscal consolidation is going on the path. There is no issue. The issue is that if you achieve higher growth in nominal terms, most of the fiscal consolidation will take care of itself. You don't need any other special effort. All that you require is growth. That means for India, what is the priority? Sir, several, you might have been reading in the newspapers that there is a trade-off between fiscal consolidation and growth. Sir, there is no trade-off. For the understanding people, there is no trade-off. Higher growth will automatically take care of the fiscal consolidation. It is only when the growth suffers that the fiscal consolidation becomes a big problem. That means there is nothing to really worry about. Just go ahead and have higher growth. That's all. That is the focus. That is the priority. The next thing is very relevant. Effective average interest cost to central government is actually increasing. And this is no surprise because RBI is increasing the interest rate, repo rate, like left, right, and center. Why? Because Fed is doing that. If that is the kind of the logic that we have, if the Fed tomorrow goes and falls in the deep sea, we are also likely to do that. Now, I think there must be some sense prevailing that we should stop increasing the rates anymore. In fact, I have been arguing that for the last 2 times, that we need not increase the rate now. We can pause, wait, watch, and then take the decision. But we have been increasing. Now that increase in the rate, repo rate and other things have a definite bearing on the cost of interest cost on the government borrowing. And average, you understand, it is not a marginal thing. It is not the thing on which you borrow right now. Average interest rate is going up by 20 basis points. Sir, this is not a small thing. That is the reason why the interest payment is rising. Next. Now let me come to the fiscal math. So the fiscal math is again given in the same 3 kind of things. Last year's budget estimates, last year's revised budget estimates, and then next year's budget estimates. What we see is the interest payment, which is a committed expenditure. You can't do anything with that. You have to make it. Then you have the pay and pension. Pay and pension. In fact, many people accept that pension is a very important thing, but pay may not be it may be discretionary. Sir, that is wrong. Given our labor laws, given the unions in the government organizations, sir, pay and pension both are committed expenditures. You can't do anything about that in the short run. Then you have the food subsidy. I have not considered all subsidies. I have not considered the fertilizer subsidy and I have not considered the petroleum subsidy because food subsidy is based on the Food Security Act. Act means your commitment. You are obliged. The act for a change. I'm surprised sometimes, it's a great amusement that in our act, we are specifying the prices in rupees. The act says that the rice will be available for 3 rupees per kg and wheat will be available for 2 rupees per kg. No matter whether you are talking about 1970, whether you are talking about 1980, whether you are talking about 2020, or whether you are talking about 2030. Does it make sense, sir? Now, 1 rupee coin is out of the circulation practically. Now, nobody talks about 2 rupees and 3 rupees. And yet, our act talks about this. That means that we are having this as a matter of committed expenditure. That committed expenditure, I have put them into that. The next thing is the Finance Commission grants to the states, which is given as an award by the Finance Commission and you have accepted in the Parliament. So it becomes a committed expenditure. I'm not talking about other grants. They are not considered. They are all discretionary. These are not discretionary. They are absolutely committed. Then you have GST compensation fund. While making people agree on the GST, you had given them the promise that if your growth of GST revenue is less than 14%, center will compensate. Center will compensate. At that point in time, the rate of inflation was 2% and 2.5%. And the rate of growth itself was coming down. So our nominal growth was in the range of 9 and 10%, and we had committed that the growth of GST revenue should be 14%. So that is how you had to create the fund. And that contribution to the fund is a committed expenditure. There is no other excuse. And finally, you have the total committed expenditure, just the total of all these things. Add to that the defense. Given our neighbors, sir, you think that the defense expenditure is a discretionary in genuine sense of the term? There has to be some kind of the commitment to that. And I would consider, therefore, I always put committed expenditure plus defense, because you can't do anything with that. If you consider all these things, you have the non-defense discretionary expenditures, which is the last column, which is the last row. Now look at this thing, sir. What is the fiscal math? As I was telling you, there is a huge decline, huge correction in the committed expenditure as a proportion of GDP. From where does it come? Wonderful to see all the red items that I have put there. It is a shocking thing that in absolute terms, the pay and pension takes $5 trillion in the current year, 2022-23 revised estimates. Okay, this has overshot the budgeted number. On the other hand, this budget talks about bringing it down to 4 trillion rupees, cutting by 20%. And in terms of the proportion of GDP, it is brought down from 1.83 to 1.33. Sir, this 50 basis point come only from cutting the pay and pension. I don't think this is plausible at all. This is not even defensible, sir, because pension is a fixed liability. That means that whatever curtailment that you are talking about is not in the pension, it is in the salaries. What is the implication of this budget, sir? Nobody has gotten into this kind of details. Therefore, the question is that if you look at the numbers appear very, very brilliant. But then, these are the cockroaches there. Then I would say the food subsidy. Food subsidy is now being proposed to cut down so heavily from 1.05% of the GDP to something like 65 basis point. another significant reduction of something like 40 basis point. So 50 basis point in pay and pension, 40 basis point there, almost everything is taken care of. And on the other hand, you have the finance commission grant to the states. That is also being proposed to be cut down. Sir, this committed expenditures, if we are cutting down like this, doesn't appear to be very credible at all. One has to see and one has to justify how are these numbers telling, because what it implies are terrible. But if you grant them, then the rest of picture is fantastic. But if you grant them, that is the basic question. I have my serious doubts about that. What is the defense, sir? The defense is that the pragmatic bureaucrats have already provided for almost 1.5 to 2% cushion for the revenue receipts, because the growth has been understated. If the growth takes care of this thing, these numbers can be taken care of. But then is this the way to prepare the budget? Don't ask me this question. This is how the budgets have been prepared in the past also. This one also is no exception. Okay. Next. As far as the revenue receipts are concerned, it's a fantastic mathematics. Budget math. What is the budget math? Everything is growing at the rate of 10.5%. So that means there is hardly anything which is changing at all. In fact, between revised estimates and budget estimate, the proportions are the same. Income tax, corporate tax, excise, customs, everything put together, everything remains the same. Total revenue receipts, everything. So therefore, it's a situation where you are really finding that if the income estimates keep changing, if the income estimates are not firm, these are also not firm. Okay, so the budget, the fiscal math has a problem. The last slide, the next slide. This is the estimate of the PIT evasion. So I am preparing to hand over the mic to, so don't worry, I have not exceeded my time in a significant way. The estimate of this thing is being for the year 2000, assessment year 2018-19, because this is the latest year for which I can get significant amount of data from the income tax department itself. It is their data. Okay. And I have supplemented other data to make this kind of calculations, because it is not available from one source only. You have to put everything together. What is important is total population in the country is about 131.41 crores during 2017-18 is a financial year. The personal income, which is relevant for the personal income taxation, is 130.7 trillion rupees at that point in time. Out of that population supported by PIT filers, I have assumed that every PIT filer supports 4 persons, including himself. So it's a family of 4, and there is one return. Very conservative assumption, sir. But if I consider that, the total population supported by the PIT filer is 23.15 crores. And their income is 37 trillion. BPL population, who is not supposed to pay the taxes, they are much below the level of income. Their estimation is 35.61 crores, and their income is only 7 trillion. Obviously, they are below poverty line. Agricultural landowners again are exempt from filing the income tax returns and all that. Therefore, I have taken their number also, 34.59 and 23 trillion dollars, trillion rupees is their income. Non-filers below exemption, those who are not filing returns at all, but their income is below exemption level, right? Then they are not evading. They are simply not required. Is it okay? Their number is also 16.80 crores and 10.5 trillion rupees. If I put all these things and subtract it from the totals, I get non-filers without agricultural lands, but above exempt limit of income, who should be filing returns, who are not filing returns, they are evading the tax. Sir, they are as high as 21.26 crores. Divided by 4, that number is a total number of filers who should be there, but who are not there. And their income is whopping 53.1 trillion. Sir, in terms of the proportions, about 16.2% of total population and about 40.7%, 41% of the income is actually evading personal tax in this country. With these numbers, there are several things which are announced in the budget, and my dear friend is going to dwell on that at length, that what are the benefits and what are the kind of the great changes which are made in the current tax regime and all that, and how the equity is and the equality is being addressed. Sir, my concern is, if these people stay away from the tax net, and there is precious little which is done to ensure that any one of these is coming back into the tax net. With this kind of concerns, my only thing is, what are we talking about? The guys who are going to get some benefits, if you total them up, it is around 3.5 to 4 crores. That's all. So for 3.5 to 4 crores, we are having this kind of hung-ho. On the other hand, there are 21.26 crores who are left in the wilderness. And 41% of the personal income is officially recognized in the GDP calculation, but remains completely outside the tax net. These are my concerns. The budget has not addressed this. So I refuse to comment on the impact of budget on the inequality, because it is not making any sense to me in the presence of these numbers. Okay? All said and done, there are hits and misses. I have tried to talk about several of them. Let me tell you, on the whole, this budget is a wonderful budget because it is on the conservative side. There is a room for optimism because, like this year, next year also we are going to have good surprise. And probably we are not going to deviate from the fiscal consolidation path, from the fiscal reform path. And that is how we should thank the budget makers, that by not significantly tinkering the things in the other way around, that is, creating nuisance, at least they have avoided creating any nuisance. Therefore, this is a very good budget in the trying times. I thank you here. Thanks.
A very good evening. And Ravindra Bhai, I want to reiterate that this is your second avatar here at AMA. Of course, we've been fortunate to have a relationship with the Dholakias that if one is not there, the other will still be there with us. And we always say, that finance ministers may come and finance ministers may go, but we go on forever. The budget analysts and Savan, you were right when you said that 43 years in a row is no small time. We started 1980. In fact, I've been seeing Professor Jaju since those days, and so many of the familiar faces in the audience. It's always a pleasure to be here. And friends, what I thought is, instead of taking the entire finance bill, because if I had to do that, it would be taking a few hours together. I thought I would focus on something that is on the top of everyone's mind. And that's why I've given this small little topic. Old may no longer be gold. You have to consider whether old is going to be gold. And if you understand it correctly, new can be even more attractive for you. So it is old and gold and new and you. But before I begin, friends, can we have the first slide? Narabin? Yeah. The Panchamrut, the last one, I think you kept it. Yeah. Yeah, okay. This is something with which I want to start. Ravindra Bhai, I have been, of course, at AMA 43 years, but since I started my profession in 77, it's been like 40, this is the 47th budget in a row that I'm analyzing, starting from Mr. H.M. Patel's budget. And of course, even the budgets before them, from the academic interest point of view, I've studied them. This year's budget, a lot has been talked about the Amrit Kal. Amrit, 75 years of India's budgeting history. Look at these figures that I have placed before you, friends, and I want to point out that in India's budgeting history, individual taxpayers have got the highest ever tax relief of 20% in a single year. You take the current 22-23 and the proposed package of 23-24. And what comes nearest to this budget, I would rate this in terms of reliefs to individual taxpayers as the number one. The closest could be, we all remember what was known once upon a time as the dream budget of Mr. P. Chidambaram in 2008. And I've given some very interesting figures. Friends, in 2007-8, the on taxable income of 15 lakhs at that time, the tax was around 4,52,000 with an average tax rate of 30%. And when he presented the budget in February of 2008, for the financial year 8-9, the year to follow, fiscal year, there was almost a 49,800 plus tax relief, which was the maximum that was given. And that was a whole combination of the rise in the exemption limit, the restructuring of slabs, and bringing down the peak rate, which used to be 40%, to 30%. So, as a collective measure, that resulted in, if you consider 49,000 to the preceding year's tax of 4,52,000, it would translate, friends, to around 11%. And on a similar income of 15 lakhs, for 22-23, Savanbhai, you know very well, the tax is 1,95,000. The average tax for the current year, 13% on 15 lakhs. But believe it or not, it is true. And the tax now for the coming year is going to be 1,56,000 on taxable income of 15 lakhs if you go for the new scheme, bringing the average tax rate to just 10.4%. So if you take the 39,000 in terms of percentage to the 1,95,000, friends, it is a 20% tax relief. No finance minister, of course, madam made us wait for 4 years. So somebody may say, કે તો આ 4 વર્ષનું ભેગું કરીને આપ્યું 5મા વર્ષમાં, હા? અને એ પણ જો ઇલેક્શન ના હોત તો ભગવાન જાણે. But nonetheless, you always look to what is the reality today. And I would say that in this historic Amrit Kal budget, she has definitely given what we should all welcome with open arms. As far as individual taxes are concerned, I would say nothing short of a Panchamrit. So the FM deserves full compliments. There are some small measures not directly related to tax, but very welcome. And one of the very significant thing, because I find that there are a number of senior citizen friends, even I belong to that community now, most of us do. And for senior citizens, he really gave good news. It has nothing to do with tax. But in the budget, he said the senior citizen savings scheme, which currently offers 8% rate of interest with full security and everything intact, nothing to worry about. So 15 lakhs used to be the limit. That has been, fortunately and deservedly, raised to 30 lakhs. And if in the family you have a senior citizen couple, then obviously you can go even up to 30 plus 30 with first and second name, turn by turn, and make it 60 lakhs. The husband could very well give a loan to the wife, interest-free, and then the wife could earn, legitimately interest on that with her name as the first. So 60 lakhs, 8%, 4,80,000, 40,000 per month. The hard-earned savings would fetch something really tangible. Of course, what makes me wonder is, being a Mahila, showing Samman for Mahila was a wonderful gesture, but why such a small little Samman of only 2 lakhs? I wish, she could have been a little more large-hearted, and because it offers 7.5%. In fact, I would say that I've always been writing about 2 schemes which are my favorites all time. Right? For the past over 50 years, the PPF, and the other is the Sukanya Samruddhi Yojana. Of course, we do understand, Ravindrabhai, that the government doesn't want to increase its debt burden and more so give these tax exempt rates of interest. But nonetheless, and what is again mystifying, it is 2 lakhs and that too for a duration of 2 years. It could have been for a longer period. Let's hope that it does receive a little bit of a review. But that is one of the, I'm taking these smaller points a little bit first because I want to devote time. I came with a firm determination that, since the past almost close to 32 hours, juni navi, huh? જૂની નવી એટલે આપણને કંઈક બીજું જ યાદ આવે, હા, કે આ જૂની જતી નથી ને નવી આવતી નથી, હા, ટ્રેન સ્ટેશન પરની, યાર. So another welcome measure is, physical gold you convert to electronic gold. Again, a very imaginative proposal that, okay, you don't want to keep physical gold at your home, better keep it safe place in your demat, vault, this, that. But then it changes its form and shape. So it would be a transfer. You may have this gold for years together. Now, if you take the historical cost, and under the Income Tax Act, even an exchange is a transfer, as you know, and it attracts capital gains. But here, under Section 47, a welcome provision. So these are some of the things. Interestingly, we can also feel the pulse, of the Gandhi family, irritating the the ruling party. And quite interestingly, I don't know whether you have marked it, because this is a small provision in the finance bill, but for the first time in the list of institutions eligible for donation under Section 80G, 3 institutions have been handpicked. અને જેમ આપણે પેલા દૂધમાંથી માખીને ઉઠાવીને આમ કરીએ ને, and with the explanation, in a way the explanation is correct also, that in the entire list of charitable or religious institutions or institutions doing some work for the public benefit, there are only 3 institutions which were recognized and put in this list, which carried personal names. There is no such other institution. So by now you would have probably guessed which are those 3 names which have been picked. Any guesses? Starting from Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Fund, Rajiv Gandhi Memorial Fund. They did not get a chance finally to get the 4th name in the row. Otherwise, even that would have been handpicked. So finally, even the Income Tax Act is now in the Amrit Kal year free from the Gandhi family influence. Well, that was a bit in the lighter vein. No political overtones as far as I'm concerned. I don't belong to any party. But this was quite interesting and amusing as well. Well, friends, I wish to devote a fair amount of time. And then, of course, there are some other provisions which can touch. I'll close with something which needs, I think, attention, and we all will have to raise our voices. But let me start with, the first slide, and that is old versus new, the tax regime. We need to understand. Now, friends, this so-called new regime along with the old came in with the entry of the finance minister in 2019. And from 2021 onwards, we have had this scheme or regime in progress. Now, currently, the old tax regime is the default regime. There is this section of the Income Tax Act 115 BAC, and it applies to individual HUF, and the scheme is that old is the default. And if you wish to opt for the new, then you have to make a selection while filing your tax return. And then there are certain riders, as you know, that if you are not having any business income, you can keep on changing your mind from year to year. If you are having business or professional income, then you can do it once, but not thereafter. One important change and very significant is effective the coming assessment year 24-25, that is the fiscal year 23-24, the new regime will be the default regime. So everybody, prima facie, if you don't exercise your choice, you will be governed by the new regime. If you want to opt for you'll have to exercise that option. However, as I'll take you through this entire exercise, I'm going to impress on you that overwhelmingly, in majority of the cases, you may not want to look at the old. Start looking at the new and try to understand the benefits, the advantages, and make the most out of it. So keep in mind, the first important change is that I'm going to use these two terms, the existing new and the proposed new. The old is only one. So I'll come across the terminologies. I'll use the old scheme, existing new scheme, and the proposed new. Okay. So under the proposed new, as I said, the default regime will be this, but under existing new, the scheme is applicable only to individual and HUFs. There is an important change, and accordingly, it will now be applicable to an AOP, that is an association of persons, except a cooperative, BOI, body of individuals, or artificial juridical entity. Now, pausing here, you are aware that when we talk of AOP, and as I'll take you through a case study later on, even a private discretionary trust generally attracts the maximum marginal rate, but in case of a private discretionary trust, there are two exceptions. One which is created under a will, or one where none of the beneficiaries have any taxable income. They are treated as AOPs. We'll see what kind of benefit they can reap. Next slide, please. So take a look at the tax rates that have been proposed. You are familiar with the rates that are existing, so I have not repeated them. But keep in mind now that the personal income tax rates for the old tax regime, they continue unchanged. So what is the scheme? 2,50,000 basic exemption. So now you have two basic exemptions. Under old, 2,50,000. Under new, 3 lakhs. Under the old, up to 5 lakhs, you get the benefit of rebate. And the first slab is 2,50,000 to 5 lakhs, which attracts 5%. Then 5 to 10 lakhs, there is a straight jump as it was earlier, 20. And then about 10 lakhs is 30%. So they have been kept unchanged. So I have not referred to them, I'm just mentioning. But under the proposed new tax regime, friends, keep in mind that 2,50,000 is raised to 3 lakhs. And the other change is the tax slabs were for 2,50,000 each. 250 to 5, 5 to 7.5, 7.5 to 10, up to 15 lakhs, and then it was 30%. So now they have made it 3 to 6, 5%, 6 to 9, 10%, 9 to 12, 15%, 12 to 15, 20%, and then above 15 is 30%. So this is what you have to keep in mind, because all these things are then going to, how do they translate? We will take a look at it. Next slide, please. Old versus new, please keep in mind, both the regimes will have separate amounts of eligible rebates under section 87A. As far as the old is concerned, as you are aware, 5 lakhs is the limit. So your effective rebate is 12,500. If means if you do not opt out to go for the old, then you are governed by the new. In that case, 7 lakhs is going to be your limit for threshold limit for 87A. So in other words, the amount of effective rebate is doubled from 12,500 to 25,000. So that is what you have to keep in mind, that your maximum rebate of 12,500, when we take the overall benefit, this rebate itself is giving an additional benefit of 12,500. The tax slab rates, which we saw, they also, see, because of instead of 6, when you are having 5 slabs, and the way they are structured, you get advantage there as well. Next, please. I would say one of the best things that has happened is the reduction in surcharge. And also, surcharge is something which is, I think, after a long, long time, the FM has been bold enough, because what happens is nobody wants to give reliefs to the high net worth individuals. They think we'll come up for criticism. But I would say this is something આપણે કોઈ પાપ થઈ ગયું હોય તો પછી પ્રાયશ્ચિત તો કરીએ ને. So 3-4 years ago, unheard of in the India's taxing history, you should appreciate that somebody is honestly showing his income at 5 crores and above. He could have done otherwise, like many people do. But then you are punishing him. And then, as I always used to say, कि आपके सर से पगड़ी बड़ी हो जाती है. 30% is your maximum tax rate. And the surcharge on that used to be 37%. And add your 4% cess, so it went up to 42.74%, close to 43%. And then we say, our tax rates are internationally competitive, 30%. Well, there is a marked difference between 30 plus another 13 going to 43. Well, one of the welcome measures is the surcharge now has been brought down, and above 2 crores, it will be 25%. It will not get into the 37. The 37% bracket has been, you can say, slashed. It has been removed. However, keep in mind, the government's focus, all these steps which you will see, you can very clearly make out the government's focus is, in the coming times, we want you to start living with the new. નવીની જોડે રહેવાનું, હા? હવે જૂનીને ભૂલી જાઓ. સાહેબ, જૂની ભૂલાય કે ભૂલવી જોઈએ? So, જૂની નવી, sometimes at least even that gives us a little amusement, amongst all the taxing troubles that we may have. So anyway, I am very happy with the reinstatement of standard deduction. Even when the new scheme came in, the the existing new, I very strongly advocated that the minimum that they should have done at that point of time was to have retained standard deduction for the salary. Well, finally, standard deduction of 50,000. So as far as standard deduction is concerned, the old and new are at par. There are a couple of other things, the employer's contribution under 80 CCD, then there is a deduction in regard to employment for business, 80 JJA. But barring those couple of them, basically the new regime, doesn't talk about any exemptions, deductions, etc. So what is welcome is that while, your maximum rate will now come down to 39, because 30 plus 25 plus 4 says. So it will be there at 39. So a significant relief, and we'll see in one of the case studies later what it translates to. The standard deduction, along with that 50,000 for family pension, which is taxed under other sources, they have 15,000. Even that is reinstated, which was removed earlier. I think these are very welcome things. Now, kindly understand, friends. You may ask me, what is the logic of going towards the new? Because you want to give tax concessions, tax benefits which have been given. As I said, 39,000 in a single budget. It has never ever happened before. In fact, in percentage terms, it stands out number one. In absolute number terms, maybe Chidambaram's budget was a little more, but still in terms of percentage, this stands out. So, why new? As I, having been as part of the task force and knowing intimately well as to what is the government's thinking, friends, that what happens, either the litigations or we are living in Kali Yuga, there are bound to be mischief mongers. People create rent receipts. We know, we have been reading in the papers, the LTC scams, medical reimbursement, the fake kind of things that go on. And in a regime, there used to be a time when almost, I'm talking of the 60s and 70s, when almost every tax return was scrutinized. Now, in fact, Professor Jaju is here, he's aware, and my dear friend in the CPC, and our dear friend rather, Dr. Sivichain Matthew, I think the finance minister made a mention of it. And I think we need to give a round of applause for this fact that this year, 46% of the returns filed were processed within less than 24 hours. Gone are the days when, you had to wait endlessly for refunds. And if a refund came to you, it would be an empty envelope. RPAD would be there, but the envelope would be empty. So then you would say, oh, kem khali gayo. So then you are obliged to go to the Babu. So Babu will then open the desk. Sir, here is your order. પણ શું કરવાનું છે? What happened once, an NRI, he was not getting his refund. So he thought, I'll try to get it on my own. Good old days, he went there and he was told, "Su karvanu che." Or NRI doesn't understand this language. What is the meaning of "su karvanu che"? He says, "Why refund આપવાનું છે?" પેલો કે પણ શું કરવાનું શું છે? સાહેબ ખાનું ખોલીને કવર કાઢીને મારું રિફંડ આપો. And they just could not match their minds together. Thank God, friends. Gone are the days when, you had to, I know, in July, it is raining hard and with an umbrella in one hand and બગલમાં રિટર્નો દબાઈને અમારે ત્યાંથી બિચારા લાઈનમાં ઉભા રહે બધા. We have seen those times. Or, as I said, people being required to wait for hours and hours together. Sahib, cha piye છે અંદર, time નથી, બેસો બહાર. And then a fishing expedition. We've gone through all that. Times have changed. CPC processing, faceless assessments. With the, and there was a time I remember they used to say, oh, India ma to kahin computer chaltu hase. Faceless to થઈ જ કેવી રીતે શકે? Well, friends, even the prophets of doom have been proved wrong, and the system has worked, fortunately. So we are happy and lucky. So the idea in this new scheme, new regime is that, the government's trust is on trust. Now every single rupee of yours, even if you don't know કે તમારી કોઈ બેંકમાં સેવિંગ બેંક એકાઉન્ટનું ખાતું તમને ખબર નથી, ભૂલી ગયા હતા, ફ્રીઝ થઈ ગયું છે, પણ તો એમાં વ્યાજ જમા થાય, there would be interest credited. Income tax department knows it. Why? Because annual information return is filed. So tracking your income was never a challenge. But what about tracking your deductions or claims that you are making? You can't be picked up for scrutiny in all cases. Even this time, the FM said our approach is going to be less and less of scrutiny. So in this context, friends, I think it is in fitness of things that we have to forget about this. And as I was telling Ravindra Bhai yesterday, just imagine somebody earning 15 lakhs of income. 39,000 in a single year is his tax relief. What will happen? 39,000 either he will spend, it will help the consumption economy, or he will invest somewhere, or partly do this and partly do that. At least it is money which is coming in the economic stream. I'm going to point out later, the tax rates have become so friendly as they are. It is time that, we get out of this shackles of black economy and whatnot. In this context, friends, I sincerely believe that we are in the right direction. And what was strategically a blunder in the sense they passed 2-3 years, but there were inherent flaws in the existing new scheme and therefore it never took off. Now, with the changes that have been made, the new scheme is going to run. And people will get used to it very soon. So we go to the next slide, friends. And I'm happiest about the leave encashment, non-government employees. Of course, we have to keep our fingers crossed because we don't know. This is not in the section. It comes by a notification. What date the notification will come and effective when? I really wish at least this is the year Amrit Kal, they give it to everybody who has retired in this year. Fortunately, at least in their tax returns that they file, they can claim the exemption. This story of 3 lakhs is in 2002, because what used to happen always, even today it happens. The Babus sitting in the North Block, with due respect, I have very good friends, but it's a general Babushai tendency. It's not that it's meant for anybody individually. They would say, અમને મળે એના કરતા તમને વધારે ના મળવું જોઈએ. You should not get more than what we get. So, they will bring in the exemptions and notifications, etc., based on what they are getting. So in 2002, they were getting 3 lakhs. So they brought in a provision that for government servants, completely exempt, and for the private sector, 3 lakhs. From time to time, the government leave encashment went on increasing. And almost around 25 lakhs is what they get maximum now. But nobody thought of the private sector. Even the public sector, because it's still non-government. And therefore, you get about 10 months of salary as your leave encashment. and say your salary while you are retiring is around 2.5 lakhs, 25 lakhs you will get, if you have that accumulated leave. But only 3 lakhs is treated exempt, and the entire amount remaining at a time when you need it most to plan for your retirement, you have to pay tax on that. Thank God, that limit is raised to 25 lakhs. Of course, as I said, we'll have to wait for the notification. Next slide, please. So, friends, keep in mind the cumulative impact of the proposed amendments. 3 things. 1, rise in exemption limit from 250 to 300. Rationalization of the slabs from the earlier 6 to now 5 with breaks of 300,000 and eligibility for standard deduction. Together, friends, even 50,000 will make a difference. 30% of that 15,000, your rebate 12,500, and then on balance on account of slabs. So, under the proposed new tax regime, friends, now it has been made attractive. And I'm going to take you through some case studies. Case study 1, please. Next slide. Yes. Here, you may wonder, okay, what is that stage where the old and new will have a meeting point? And here is an example that if there is a gross salary of 15 lakhs 50,000, if you prefer to continue with the old, opting for it, you would need, apart from your standard deduction, other deductions to the extent of 3 lakhs and 75,000. So you have to almost, you can say 25% of your, your take home is going to get blocked, apart from the tax over and above. So, there is a debate going on that, this kind of a new scheme will hurt the savings and investments and all that. Friends, there are 2 views on that. You see, you can always, have your savings and investments, but do it your way. Why do you want only those prescribed listed savings, And some of them are obsolete, don't even make sense. So, friends, if you are taking 4,25,000 as deductions and 375 is your actual outgo on account of allocations, etc., your taxable salary under the old regime would be 11,25,000 and the tax payable would be 1,56,000. Now, under the new regime, same income of 15,50,000, you will now get a 50,000 standard deduction if you are a salaried employee. Your salary taxable would be 15 lakhs, and you, without being obliged to spend a penny on compulsory, it's always optional, your choice to go for whatever you want. You can end up paying the same amount of tax. This is on account of, these entire incentives as a package. Let me move to the next slide, please. This is very interesting. Probably it has not come in any of the media papers anywhere, because these kind of trusts, which are discretionary trusts created under will, or discretionary trusts where none of the beneficiaries have taxable income and they are not a beneficiary in any other trust. Because of this provision that AOP also is now to be included as part of the new regime. So such a trust on taxable income of 15 lakhs currently is required to pay 2,73,000. It will now come under that 1,56,000. So 117,000 rupees. If you want to do some smart and legitimate tax planning within the 4 corners of law, here is an opportunity that you can look at. Friends, let us go to the next slide, because these people keep on asking, old or new, what should I do? So I am giving you some food for thought so that you can find the clue. Now, friends, how do you choose the right regime for you? As I said, you have to look at the deductions claimed. Your deductions could range from 2 lakhs to 5 lakhs in this example, as I have given. Now, if you will see that the break even or cutoff is at 3 lakhs and 75,000. At that point, the old and new are same, 0. So you can go for any. But if your deductions are more than 375, then you would be better off going with the old. And if your deductions are less than that, then obviously you will see that if your deductions are only 2 lakhs, you know, you will be benefited if you go for the new, because you will pay 54,600 rupees lesser tax. So 54,600, 39, 23. This is the table which you can just keep as a ready reference when you have to apply your mind to choose what it is. Okay. Now, let's go to the next slide, and that is Guru Mantras to remember. So, as I pointed out, where the total income is more than 15 lakhs, the break-even point is 375. Keep that in mind and then decide what to do. You know, sometimes you can even be smart enough that, okay, pool all deductions in the case of one member of the family and try to take the maximum benefit of deductions, everything there. Other cases, so one can be in the old, other can be for new. So it's all up to you, how to make up your recipe. And in case of salaried employees, I think the good news is that 750,000 rupees, friends, you don't need to do anything, no investments, allocations, etc. You will straight away with the rebate of 7 lakhs and 50,000 of standard deduction, no tax. Next slide, please. Now here, friends, just take a look at this. Ravindra, I often say that if you really try to understand, how little the government is expecting from you to pay in terms of tax, in terms of average rate, you would rather say, "Kya re baba, su karwa chori chapati ni matha kut karvi." Just take a look. Up to 7 lakhs, your tax under the proposed new is 0. So currently you are paying 33,800. You will straight away. This is not the old, please. This is, in support of the first presentation that I pointed out, that really remarkable relief is being given, something tangible. So at 7 lakhs, you would, under current existing new, you are paying 33,800. Now it will be 0. So it's a 0% tax rate. Say you are at 9 lakhs, you are still saving 15,600. And what tax you are paying on 9 lakhs? 46,800. What is the tax rate? 5.2%. Just work out. At 12 lakhs, you are paying 93,600. The tax rate is 7.8%. And at 15 lakhs, friends, when you are paying 1,56,000, this is inclusive of the cess. Minus the cess, it will be exactly 10%, but with the cess, it will be 10.4%. Now, Savanbhai, as part of Deloitte, you have access to the global tax systems. Just look up. 15 lakhs is not a small amount. And we are not like in US that it's a joint return. You can file for yourself, you can file for your wife, you can file for your HUF, for your son, for your son's wife, son's HUF. So easily 6 returns. That means you can end up, if you strategically work out, you are an investor, about 1 crore of rupees, and still with an average rate of just 10%. I would be one of the biggest fools, if I try to tamper around. The time when we called Chidambaram's budget as a dream budget also, it still used to be average rate of 30. But then, we had gone through that 97.5 and then 72 and 66 and 50. And I know 1985, it was not this hall because this was not there. We used to have meetings outside. But at that time, I remember when VP Singh said that, I am reducing the tax rate to 50%, there was huge jubilation. And Manmohan Singh in 91, 92, 40%, everybody was gaga. And when Chidambaram did it, I remember his words. He said, the 30% tax bracket that I am bringing, no finance minister would be able to ever match the tax relief that I have given. Well, I don't know whether it is you need that South Indian genes to do it. But what Chidambaram did, I think, Nirmala ji, he used to wear white, and here she came with all red, including the cover for her, iPad from which she presented the budget. But then it was like a red carpet laid out, for the common taxpayers. And therefore, no wonder today, this beautiful caption, House of Commons. You had it in the Times of India. So, friends, what I am trying to say, I am trying to urge and appeal. Because even today, let me tell you, we may say that we don't have 7 crore taxpayers. No doubt, 7 crore IT returns are filed. Yes, why? Because there is TDS and TCS, and so majority of them to get refunds. How many taxpayers filing return above 1 crore? They are just a few lakhs. That's all. So we still have a long way to go. And there are some very useful measures that have been also brought in this budget. I'll refer to a couple of them. The business and professional community who are availing the benefit or who have been offered the benefit of, I think we can stop the slides because you can put it on the, just the last model, just leave it at that, the last one. That's not a problem. Yeah, you can leave it here. Friends, the limits under the presumptive tax scheme, and I tell you, this scheme has worked fairly well. For a small businessman or even a professional, a doctor, engineer, they don't want to go through audit and accounts and then, face scrutiny and all that. They would say, Baba, this is our turnover. These are our gross receipts. And the government has prescribed that minimum so much, 6% in case of, bank receipts, 8% if cash, and, in case of professionals, 50%. Now, both these sections, the limits have been raised by 50%, 2 crores raised to 3 crores as far as business is concerned, and professions is concerned, 50 lakhs to 75 lakhs. I think this is a welcome provision. However, keep in mind there is a rider that has come in along with this, and that is, so you will have a dual system. Because the rider is, the terms and conditions to apply is that if you want to take the benefit of that higher limit of 3 crores or 75 lakhs, you must ensure that your cash receipts are not more than 5% of your total receipts. So if your turnover is 3 crores, you should not have more than 15 lakhs of cash sales. And they say that even if somebody is giving you non-account pay checks, that would be treated as cash. So you have to keep this in mind. So in case, suppose somebody's business is, by the very nature of it, involving cash, then you will continue with your old, that is this 2 crores and that, which is also fine. Well, friends, it's almost 8 o'clock, and there are many other small little measures. I will very quickly take up just a couple of them, which affect, I believe, this audience, and therefore, now the life insurance, the fancy or fad for the insurance policies only from the point of view of tax saving, I think is going to be a distant dream. Because the HNIs, in fact, you may wonder why, somebody who is rolling in crores, would need insurance. Because the irony of insurance is those who need it, they can't afford it. And those who can really afford it, the question is, do they need it? They are more worried about inheritance tax. Where is the question of insurance for them? But that's the irony. But nonetheless, such insurance was being sold to these HNIs. Why? Because they would be told, "Arey, sahib, aap tax bache se, you get this return, no tax, this, that." And then all kinds of. So finally, first they brought in ULIPs, unit linked insurance plans, 2 years ago, saying that you have to look at 2.5 lakhs. If anything beyond that, you will end up, losing the exemption. Otherwise, then in case of death, no problem. The same situation here in life insurance. They say that if, again, they are so generous. They say, okay, doors are open until 31st March. So, today now I found, people running at double the speed with their bags. Sahib, 31 March સુધી હજી chance છે કરીને. Because they said in the memorandum that we will not disturb any of the earlier policies. But whatever it is, friends, effective 1st April 23, next year onwards, if the aggregate insurance premium is more than 5 lakhs, those policies will not be eligible for the exemption under 10(10)(d). Otherwise, then in case of death. ATC, you have to gradually now start forgetting, because even yesterday, Sahib, ATC, are main kadu ATC. People are obsessed with that. Because તમારે tax બચાવવાનો સીધો સાદો રસ્તો છે. Why do you want to ATC? Then, friends, again, and I think there's nothing wrong about it. People used to sell their land for 50 crores, 100 crores, and then buy a super duper luxury bungalow, villa, apartment, 20 crores, 30 crores, 40 crores. The government says, sorry, we will allow you up to 10 crores. So, friends, again, here you still have a chance up to 31st March. If you still want to get 54, 54F, get it done now. But from next year onwards, you will not get more than 10 crores, whatever it be. Listed debentures will attract TDS. There was no reason to keep them excluded. Market-linked debentures. Here there was tax arbitrage. What used to be done is, because they were listed securities and long-term capital gains attracted at 10%, they are almost like debt instruments. But they were also enjoying this. So what has been done is, okay, no doubt you have to give the treatment of capital gains because there is a cost of acquisition, there is a sale consideration, but treat it as deemed short-term capital gains and tax them accordingly. I will come up, apart from the provision, everyone plays today online games, those prizes and that. There again, the provision was 10,000 was the threshold limit. So what people used to do, 30-40,000 નું prize લાગ્યું હોય, break it up, in 3-4 different styles, and try to avoid the TDS. Because once you are in the TDS net, then there's tracking. So they said that if in a fiscal year, it is 10,000. And they also brought in online games and everything within the scope of that. There are several other provisions, but I leave them aside, as I said, because constraints of time. I only want to ask you, having come this evening into this auditorium, what thoughts you had on the old versus new before you came in and before you go out now. Do you think there has been some clarity of your mind in terms of thoughts, etc.? Yes or no? Yes? Okay, great. Unfortunately, we may not have time to get into questions today because it's already time. We normally close at 8:15 and not later. So I am going to allow my colleagues to close, but I want to take up. This is something which always keeps on happening. Ravindra bhai, even Bakul bhai and I, કંઈક તો સળી કર્યા વગર ના રહે. અમૃતકાળનું અંદાજપત્ર શું વાંધો છે ભાઈ, સળી તો કરવી જોઈએ ને. સો જેમ આપણી પેલી કહેવત છે ને કે સોનાની થાળીમાં પણ લોઢાની મેઘ ઠોકી દે. Unfortunately, I fail to understand why this should have been done, but what they have done, you might have read in the papers today. There is what we call as the Liberalized Remittance Scheme, LRS. Now, when this TCS, tax collected at source, came, they said, like they have 1% on that car that you buy about 10 lakhs, justified, you want to track. But they brought in 5%, and there also for these educational loans, there was a hue and cry, so they brought in a provision, if it is covered by 80E, 0.5%, otherwise 5%, and then they put in a threshold limit, 7 lakhs. પણ અમદાવાદીઓ ઓછા નથી આપણા. એ શું કરે, દીકરાને મોકલવા હોય 15 લાખ રૂપિયા કે તો 3 નામોમાં 5-5 લાખ મોકલે. કે 7 lakhs is a threshold. TCS જ આવે નહીં એટલે પૂછાય નહીં. So, who should be criticized? Well, removing a threshold limit also I can understand, because you don't want to allow such arbitrage. But what is the logic? From 5%, you are making a jump to 20%. As I said, even on an income of 15 lakhs, your average tax rate is only 10%. And here, you are not sending out of your income. You would have your past savings or accumulation. Your son, daughter is an NRI and you want to support them for something. You want to make some investment in your own name. And yesterday, the finance secretary was saying that, this is all by, those big people, and therefore, why should they be spared? They all come in 20% bracket. Sorry. These overseas tour package, where you used to have 5% without any threshold limit, now it is 20% without threshold limit. So a small family, middle class family, now everybody wants to go. They want to go to Europe. They want to go to Singapore. They want to go to America. So the travel agent says, you have to give 10 lakhs, towards the whole trip for the family as the foreign exchange contribution, which is part of LRS. So out of 10 lakhs, 2 lakh to bank dabai de. તમારે 26AS માં જોઈ આવજો ભાઈ. And next year when you file your return, you can claim the refund. Ridiculous. What will happen? I wish it doesn't. But if the government wants to open floodgates for this, I was talking to Ravindra bhai yesterday, the good old days of the Hawala transactions will emerge. What will you do? ભાઈ આપણે આ 20% આપણા કપાવા નથી દેવા. So then કોઈકને કહેજો ને ભાઈ ત્યાં આપી દેશે બારોબાર, આપણે અહીંયા આપી દઈશું. Why do you want to create such kind of mischief? I sincerely wish, and I am requesting Ravindra bhai, you are going to have a tete with madam, being part of the RBI's very elite group. At least, first of all, please compliment her. Even she might not know what I have pointed out, that hers is number one budget in these 75 years. So please compliment her for that. Tell her that at AMA we publicly applauded her. But after having done in the beginning, at the end, we also said, બેન બે હાથ જોડીને કહીએ છે આવું તોફાન ના કરાવો. We don't want to go back to those Hawala days, For God's sake, there is absolutely no justification for a draconian 20% TCS. So let's hope for the best. Otherwise, all kudos to the finance minister. I think wonderful things done on the fiscal front, and even more wonderful things done on the tax front. In fact, procedural provisions also, there are some very good things that have come in, but due to constraints of time, I'll wrap up here with a sincere hope that next year there'll be a new government. We don't know a new finance minister or the same finance minister part of the new government. But men may come and men may go. The Dholakias and Patels will continue together. Thank you.
Thank you, Mukesh bhai. Ladies and gentlemen, just round up. Of course, my job is vote of thanks, but just 3 points. That this fiscal correction, that absolutely eye-opener the way Dholakia sir had communicated, and a bigger eye-opener was on the PIT, personal income tax returns, and 40% is a huge sum to be tracked. That's something. So thank you, sir, for that. Of course, Mukesh bhai, I'll not go through so many things that you have actually, I would say, enlightened or rather educated us, and we've come a long way. But surely in this Amrutkal Panchamrit, this Navi looks more convincing, in terms of and more attractive, which generally also happens. But it is a no-brainer kind of that we can see. ઘરે પાછા અહીંયા આવવું પડશે ઘરે જઈને કહીશું તો. But certainly I thank you everybody. Thank you to Dr. Ravindra sir and Mukesh bhai, and thanks to the secretariat for this on behalf of AMA. Thank you, and see you next year on the 2nd of February 2024.